Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Wednesday, October 15th, 2014. Well, looking at today's economic calendar, we can see there were a number of key things that we needed to be aware of today, most of which happened prior to the open of the trading session. At 7:30, we had core retail sales data coming out, which was lower at a negative 0.2% versus a forecast of a positive 0.2%. Then producer price index data came out lower at a negative 0.1% versus a positive 0.1% estimate. Retail sales also came in lower, down 0.3% versus a forecasted decrease of 0.1%. And we also saw that core producer price index data came in lower at an even 0% versus an estimate of an increase of 0.1%. Then at 7:30, Empire State Manufacturing Index data came out significantly lower than estimated, with a value of 6.2 versus an estimate of 20.3. And then at 9 o'clock today, we had business inventories come out, and inventories were lower with only an increase of 0.2% versus a forecast increase of 0.4%. Now, as far as today's pre-market sentiment was concerned, things were fairly negative coming into the open. Now, the Asian markets had closed higher on China stimulus hopes, and investors in Asia were cautiously optimistic as low China inflation data suggested that there might be some stimulus coming down the road. As a result, the Shanghai market closed up 0.6 of a point, and Hong Kong closed up 0.4 of a point, as falling consumer and wholesale prices were, if you will, fueling optimism that there could be stimulus coming. We also saw that the Japanese Nikkei closed up 0.9 of a point, snapping a 5-day loss as the weaker yen was helping to drive export stocks higher. Now, the European markets were open but trending lower, continuing yesterday's sell-off. Now, the healthcare sector was sliding after AbbVie reconsidered its $54 billion takeover acquisition of Shire in the pharmaceutical segment. We also saw that the basic resources and mining sectors were under pressure on falling crude oil prices and soft metals pricing. On a positive note, though, we did see that the United Kingdom unemployment rate dropped to 6.0% and was at its lowest level since the summer of 2008. As far as Wall Street is concerned, the U.S. figured to open up lower after the disappointing economic data was released. Now, the futures were pointing down coming into the open on European weakness and downbeat retail sales and producer price index reports. Sentiment was further being weighed down by economic concerns over a recession trend that is starting to appear in Greece and France, and that's putting additional pressure on the already troubled economies of the Eurozone. Focus for many U.S. investors today would be on the business inventory reports, which are scheduled to come out at 9 o'clock, and on corporate results from bellwether companies like Bank of America, American Express, eBay, and Netflix. Now, as far as my trading activity is concerned, I attempted 8 entries in the market and was filled on 3 of these in the E-mini S&P and the E-mini Dow markets. But before we look at these trades in any detail, I do need to remind everyone of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the 30-year bond market. And we can see in this market here, there were a couple of opportunities that I have to catch a scalping trade. First of all, you can see that we had 1, 2, 3 bars moving lower, followed by 1 bar retracing. And I was hoping the second bar was going to retrace and give me a short entry at 145.7, just below the upper Bollinger Band. But when the market fell away from me, I had to take that trade out of the market. Staying with the bond market, you can see we had 1, 2 bars moving lower here, followed by 1 bar retracing, and I felt certain this second bar was going to come up here and give me a short entry at 145.5, but the market didn't do that. It fell away from me, and I had to take this trade out of the market. The next market I'd like to take a look at is the E-mini S&P 500 market. Now, looking at this market right here at the open, we can see that there was a couple of opportunities for some quick scalps. First of all, here in pre-market trading, you can see we had 2 bars moving lower, followed by 1 bar retracing, and I was hoping the second bar was going to retrace and give me a short entry at 149.25. It didn't do that. It turned right around, moved away from me, and I had to take that trade out. Staying with the E-mini S&P 500, you can see there was another scalping opportunity. I had 2 bars moving lower, 1 bar retracing, and I was hoping the second bar was going to retrace and give me a short entry at 1849, right below the upper Bollinger Band, but it fell away from me and I had to take that trade out. Now, stick with me here in the E-mini S&P because you can see things got extremely volatile, and during this volatility here, I was just sitting on my hands. There's just no way I was going to jump on this rocket ship, and I just waiting for things to cool down a little bit, and when it did, there was a couple fills that I saw that I'd like to share with you. The first one here, you can see after the market settled down a bit, we had 2 bars moving higher, followed by 1 bar retracing and a second bar retracing. So I had a long entry here at 1846. I was risking 4 ticks to make 4 ticks on this trade. Well, I got my fill. The market moved quickly against me, 5 ticks, which knocked me out for a 4-tick loss. So I was down $50 per contract traded, and then wouldn't you know it, it bounced up through what would have been my profit target. But staying with the E-mini S&P, we can see we had 1, 2, 3, 4, 5, 6 prices moving higher. As prices moved through the support to pivot point, we had 1 bar retracing and a second bar retracing, and this gave me a nice little scalping entry here at 1850 and 75. My stop loss was at 49.75 right here, and you can see I was nicely protected between my entry and my stop loss by the support to pivot point. The market bounced 4 ticks in my direction. I was able to pick up the $50 that I lost earlier, so I was dead even and scratch on the 2 trades or the 2 fills that I had in the E-mini S&P. Now I'd like to turn my attention to the E-mini Dow market. And in this market here, we can see there was an opportunity for me to catch a scalping trade. As you can see, we had 1, 2, 3 bars moving higher, followed by 1 bar retracing. The second bar retraced, and it gave me a long entry here at 16,008. My stop loss was 8 ticks below that at 16,000 even, nicely protected by the lower Bollinger Band. And my profit target here was at 16,016. Well, I got my fill. The market moved about 4 ticks against me, bounced off the Bollinger Band, and moved up into and through my profit target. So I was able to pick up 8 ticks here, and that put me up $40 on the trading session. And that's where I basically ended today's trading session. Well, looking at tomorrow's economic calendar, you can see we have another very busy day. Things get kicked off at 7 o'clock with FOMC member Plosser speaking. Then at 7:30, we have the weekly unemployment claims data coming out. At 8:15, we have capacity utilization rate and industrial production. At 9 o'clock, we have the Philly Fed Manufacturing Index. At 9 o'clock, we also have FOMC member Kocher Lakota speaking and the release of the National Association of Home Builders Housing Market Index. At 9:30, we have the release of natural gas storage. At 10 o'clock, crude oil inventories are coming out, and we conclude the trading day at 3 o'clock with TIC long-term purchases. So no doubt tomorrow, based on the volatility that we saw today, these reports definitely have the potential to move the market. So I expect tomorrow could be another interesting and highly volatile day in the markets. And so with that, thank you so much for watching today's daily video. I wish you a pleasant evening. I look forward to speaking to you tomorrow. Take care and good night.